Welcome to the National Press Theatre. Bienvenue au Théâtre National de la Presse. Please turn your cell phones to vibrate. I'm Laura Payton from CBC. I'm chairing today. We have this morning Mark Carney, the Governor of the Bank of Canada, and Tiff Macklem, the Senior Deputy Governor of the Bank of Canada. I think Mr. Carney is going to make about a 5-minute statement, and then we'll take questions. So please let me know if you have a question.
Okay, great. Thank you very much, Laura. Good morning, everyone. Tiff and I are pleased to be here with you today to discuss the July Monetary Policy Report, which the bank published this morning. Les perspectives de croissance de l'économie mondiale se sont affaiblies depuis la parution du rapport en avril. L'économie américaine continue de croître à un rythme graduel, mais un peu plus lent, alors que l'évolution de la situation en Europe indique une nouvelle contraction. En Chine et dans les autres pays émergents, la décélération de la croissance a été plus prononcée que prévu sous l'effet du resserrement passé des politiques et de la demande extérieure plus faible. Ce ralentissement de l'activité économique mondiale a entraîné un recul marqué des cours des produits de base. Ceci demeure toutefois élevé. La hausse des capacités excédentaires dans le monde durant la période de production et le recul des cours des produits de base devraient réduire les pressions inflationnistes à l'échelle du globe. Les conditions financières mondiales se sont également dégradées depuis avril et elles ont connu des périodes de volatilité considérables. While global headwinds are restraining Canadian economic activity, domestic factors are expected to support moderate growth in Canada. The bank expects the economy to grow at a pace roughly in line with its production potential in the near term before picking up through 2013. Consumption and business investment are expected to be the primary drivers of growth, reflecting very stimulative domestic financial conditions. However, their pace will be influenced by external headwinds, notably the effects of lower commodity prices on Canadian incomes and wealth, as well as by record-high household debt. In addition, housing activity is expected to slow from record levels. Government spending is not projected to contribute to growth this year and is expected to contribute only modestly thereafter, in line with plans to consolidate spending. Canadian exports are projected to remain below their pre-recession peak until the beginning of 2014. This reflects the dynamics of foreign demand and ongoing competitiveness challenges, including the persistent strength of the Canadian dollar. The bank projects that the economy will grow by 2.1% in 2012, 2.3% in 2013, and 2.5% in 2014. The economy is expected to reach full capacity in the second half of next year, thus operating with a small amount of slack for somewhat longer than previously anticipated. Core inflation is forecast to remain around 2% over the projection horizon as the economy operates near its production potential, growth in labor compensation stays moderate, and inflation expectations remain well anchored. Given the recent drop in gasoline prices and with future prices suggesting persistently lower oil prices, the bank expects total CPI inflation to remain noticeably below the 2% target over the coming year before returning to target around the middle of 2013. Des risques importants pèsent sur les perspectives d'évolution de l'inflation au Canada. Les trois principaux risques à la hausse en matière d'inflation ont trait à la possibilité de pressions inflationnistes plus fortes au sein de l'économie mondiale, d'une plus grande vigueur des exportations canadiennes et d'un dynamisme accru des dépenses des ménages canadiens. Les trois principaux risques à la baisse touchant l'inflation sont liés à la crise européenne, à moindre dynamisme de l'économie mondiale et à la possibilité que les dépenses des ménages canadiens connaissent une croissance plus faible. Dans l'ensemble, la Banque estime que les risques liés aux perspectives d'évolution de l'inflation au Canada sont relativement équilibrés au cours de la période de projection. Reflecting all of these factors, the bank yesterday maintained the target for the overnight rate at 1%. To the extent that the economic expansion continues and the current excess supply in the economy is gradually absorbed, some modest withdrawal of the present considerable monetary policy stimulus may become appropriate, consistent with achieving the 2% inflation target over the medium term. The timing and degree of any such withdrawal will be weighed carefully against domestic and global economic developments. And with that, Tiff and I would be pleased to answer your questions.
Okay, we'll start with Bob Fife, CTV.
Hi, Governor.
Hi.
Sir, I'd like to get your perspective on what you see as the reasons for the weakening in the Canadian manufacturing sector. I'll give you an example. The auto sector in 2001 exported $20 billion. This year it's around 10 to 12 billion. What do you think accounts for the weakness in this sector?
Yeah. There's a couple aspects. First, specifically in the auto sector, as you're well aware, and Canadians are well aware, there were some specific plant closures. Our capacity in that sector has been reduced. It was reduced with the restructuring of a couple of the big three automakers in the course of the last recession. So that's one aspect in that specific sector. But that said, your question's broader, and it's an important one. And one of the key aspects here is the nature and the composition of demand, particularly in the United States. So it's the structure of where our export markets are, and they're concentrated, and it's laid out in the report. They're concentrated in low-growth economies. Unfortunately, the major advanced economies, particularly the United States, but not exclusively the United States, are the low-growth economies. 85% of our exports go to those economies. Only about 8% of our exports, as we sit here today, go to the high-growth emerging markets. So we're structurally oriented to the lower-growth economies, and one of the messages that the bank has tried to get across is that one can expect those economies to be relatively low growth for some time. So if you look at our U.S. projection, despite how weak the recovery in the United States has been thus far, this is a very unusual recovery in the United States, we're not expecting a big acceleration of U.S. growth over the course of the next several years because, for example, the United States has to adjust readjust and repair, particularly household balance sheets, but also the national fiscal level. The last thing I'll say, though, on it is so the core of it is where we're selling. So we can make a difference in terms of reorienting to whom we sell. We obviously can make a difference in terms of improving our productivity and being more effective where we sell. But the last point, to bring it back to our projection, one of the upside risks, which is a positive risk, if you will, for activity. We speak in odd terms, but the positive risk for activity and potentially upside risk for inflation in Canada is that Canadian exports could be a bit stronger if Canadian exporters improve their competitiveness faster than we expect. To be clear, we have a chart in that, which I think is chart 15, if memory serves, anyways, which shows foreign activity, the profile of foreign activity. So what happens in the U.S., around the global economy that matters most
14.
for Canada. 14, sorry, one off. We revised down the chart, so it's chart 14. And what you see in that chart is that actually what's going to happen is that the demand in the United States, in our view, the composition of that demand is going to be more positive than the actual headline GDP growth for the U.S. We're not giving the full benefit of that to Canadian exporters in our projection because we see these competitiveness problems. So it's a complex answer. I'll just resume to try to sum it up, which is that first and foremost, it's to whom we sell, and they're having a hard time, and they will have a hard time for a while. Secondly, it's a question of productivity. Thirdly, there is a bit of a possible silver lining that we have not incorporated into the projection, which is that the composition of the demand, which was very negative in the initial stages of the recession and the recovery, actually starts to become more positive in our view going forward.
Just a second question, just on the same subject. We are shedding a significant number of jobs in the manufacturing sector, particularly in Ontario. Some people have attributed to the higher dollar. Maybe that's the case, maybe it isn't. But is there not a way that we can get around this? I mean, I don't know whether it's manufacturers need to shift to building stuff for the oil sector, or do we need to figure out a way to look for newer ways to produce manufactured products that the world wants? Because I mean, it's a serious problem. Ontario is paying the price for it.
It's an issue. It's an issue across advanced economies. There's really one economy, Germany, where you've seen actual stasis in manufacturing relative to GDP, and even there, there's been a shedding of manufacturing jobs as manufacturing has become more capital intensive over the last couple of decades. So there is a fundamental challenge. The challenge is to whom we sell. You're right as well. How productive we are in producing and selling, but also becoming to the extent possible more integrated with the parts of the economy that are growing, and certainly in the resource sector. I mean, we make the point, and we're not unintegrated in this respect, but we can become more so. Ontario, you use that example, 1 in 12 of the suppliers to the oil sands are based in Ontario. Ontario exports, if you will, to Alberta in the most recent period measured, which is more than a year ago, but increased about 40%. So there are some links there that are important and can be deepened.
I just want to note that we have less than 20 minutes and 10 people on my list.
I'll be quick.
Thank you. Terry Malewski, CBC.
Sorry, Terry.
Thank you. One question about the comment that you make in your report to the effect that your projections assume that the European crisis will continue to be contained. Yes. And you tactfully add that, well, this assumption is subject to downside risks. And one's tempted to say, well, duh, those are some big honking downside risks. And isn't there some wishful thinking there? I mean, I know you've got to say what you've got to say. You can't sort of tell everyone to panic. But there's some wishful thinking there, isn't there?
No. There's not wishful thinking in terms of containment. Containment's a pretty low bar for Europe. I mean, the European crisis has been, sometimes it's gotten close, it's been barely contained, and those are terms we've used, I think, in this very room over the course of the last couple of years. But in effect, it's not a fundamental change to the structure of monetary union, which would have broader, deep, substantial financial spillovers and spillovers through trade and other channels and confidence channels to the Canadian economy. Containment is a pretty low bar. European authorities have resolution on taking a variety of measures. They have taken a variety of measures. They have other options. They have other flexibilities in order to continue to make progress, but also buy additional time for the restructuring that's necessary. What we're not saying in talking about the European crisis being contained is we are not predicting the timetable for successful resolution, the probability of successfully refounding or relaunching European monetary union. There are some major, substantial structural reforms that still need to be implemented, and in our view, there are additional measures that need to be taken across Europe in order to resolve this situation. So I would take issue with the wishful aspect there.
So a quick follow-up, that you can also continue to express concern about high levels of household debt in Canada. Isn't it all your fault? I mean, isn't that the purpose of your policy, is to encourage people to borrow and spend?
Well, there are the purpose of accommodative monetary policy and monetary policy has been considerably accommodative, has been to promote sensible investment and sensible borrowing for households for the purposes of it can be for housing, it can be for an education, it can be for a variety of things. But the emphasis is on sensible. So the terms of that borrowing need to be appropriate. Individuals, it starts with individuals making an assessment of whether they can sustain that borrowing over the lifetime of the loan or the mortgage. It extends to financial institutions, and it extends to the terms of mortgage insurance. And what we have seen is that given the evolving situation, the government has taken on 4 different occasions prudent and timely measures in order to ensure a sustainable evolution of the housing market and of household finances.
Nirmala Menon, Dow Jones.
Governor, it's on the household debt again. You said in the report that you expect it to increase. Could that possibly mean that is that also because you expect to keep rates where they are for the next few quarters? I mean, is that something?
Do you really think that that's what we're saying, Nirmala? The first thing, we do expect household debt to increase over the projection horizon. Part of that is we've had there's been very strong activity in the housing market over the course of the last several months. There's normally a lag in terms of the translation of that activity into the measured debt figures as mortgages are taken down, and so there's that aspect. There's also, well, we see a better evolution of the gap between household income and spending on consumption, spending on housing. That improves, it narrows, but it doesn't fully go away immediately. So there is an additional increase in our view in household debt. We're as clear as we're going to be, and as you can expect in terms of the path of monetary policy, both in our forward-looking statement and in the comments in the report.
Are you concerned that we've had a lot of foreign funds flowing into Canada. Are you concerned that that's going to keep bond prices low and maybe exacerbate the household debt situation?
Well, I think one of the things we've got to recognize, what's happened in the course of the last quarter, is that because of global developments, global movements in bond yields, despite all of the noise about Europe, about the situation in the U.S., developments in financial markets, that actually financial conditions in Canada have remained extremely accommodative. There's been a substantial reduction in government bond yields, as you note. A single A corporate can borrow around 3%. In Canada, I mean, this is very attractive rates, and they can borrow. It's not a theoretical yield for these corporates, and so as a consequence, the stimulus into the economy has remained quite substantial. So I think that that stimulus is there for a reason. We're facing severe external headwinds from the U.S., from Europe. A little been taken off the table from with respect to commodity prices, and so what's important is that the borrowing that's done, and borrowing will be done both by households and by businesses in Canada, that it is done sensibly by those who can bear the debt for the purposes, for sensible purposes.
Greg Quinn, Bloomberg.
Sir, many other major central banks have added fresh monetary stimulus in the last weeks and months and also cut their growth forecasts. Is it uncomfortable to be the last man standing here, holding on to the prospect of a rate increase?
We make monetary policy for conditions in Canada. Monetary policy is extremely accommodative. Financial conditions are extremely accommodative. I refer you to my last answer. We're in a situation where there's a very small amount of excess capacity in this economy. Rates are at 1%. They're very low. And we will continue to conduct policy consistent with our inflation target for Canada. This is not monetary policy. Global monetary policy is not a cut and paste.
The last couple months there have been a lot of bad headlines from the financial sector, the LIBOR scandal, the whale trading loss. We're several years into a global push for financial reform and to change the culture of banking. Are the lessons not being learned or not being learned fast enough here?
I think the second part of your question is the answer. They're not being learned fast enough. The facts that have emerged around the LIBOR situation are deeply troubling. It's not just a question of the structure of the index, which Chairman Bernanke rightly described yesterday as structurally flawed, but it's active, conscious, repeated manipulation of that index, which is yes. So I think that's right. I think the lessons are not being learned fast enough, and institutions and one should distinguish between institutions and specific behavior, but that they need to substantially raise their game and to levels of conduct that in any other aspect of life are expected.
Jeremy Torben, Globe and Mail Report on Business.
Governor, a couple of questions about LIBOR as well. First of all, when did you personally become aware of all of these issues, and is there anything that, as Bank of Canada Governor or Financial Stability Board Chairman, you thought of doing or did do or are going to do? Well,
I think we have to distinguish between enforcement issues and policy issues. So, with respect to the issues around potential low balling of LIBOR, I became aware of those as they emerged actually in the public domain in the spring of 2008. There were a number of, or few actually, media stories related to that. This was at a time where, as governors of the major central banks were discussing acute strains in funding markets, which was the principal focus of our discussions as opposed to potential manipulation. There were some bilateral discussions, obviously, that we're now aware of between some of the central banks on the latter issue. But the core was that. In terms of the specifics of the investigation or the broad thrust of the investigation, the spring of last year, the Commissioner of the Competition Bureau reached out because of their role in the investigation for some technical assistance from the bank, which we provided with some senior officials, and then obviously the specifics of the actual manipulation with the disclosure that came out in recent weeks related to one specific institution. And as you know, the investigation's ongoing, and I'm not going to comment on the specifics of that, and nor am I necessarily privy to the details of that because I don't need to be. It's not our responsibility. It's an enforcement issue. The policy issue is where do we go from here? And that, in my view, in my personal view as chairman of the Financial Stability Board, is an issue where potentially the Financial Stability Board can play a constructive role because these are, again, my personal view, I'm not speaking for the FSB as a whole because I haven't done a complete consultation on it, but my personal view is that that the public authorities have to play the leading role in determining what next with LIBOR, and if not LIBOR, what else, and how to manage that transition, because there has to be absolute confidence in this, number one. Number two, the answer for what next for LIBOR may be different depending on currency, because there are different alternatives. If LIBOR cannot be fixed, if it's structurally flawed and can't be fixed, which is a possibility, there may need to be different types of approaches, and we need to think that through. And obviously the FSB brings together all the relevant central banks and regulatory authorities who are key to this. So I have had some discussions with the relevant officials, and I will have more, and we will take this up at the FSB when we next meet.
Just two quick follow-ups. Could you say anything about who those officials might be, or what institutions you would be having those discussions with?
Well, I mean, the core of LIBOR is an issue for the major jurisdictions. So the UK, obviously, is the London interbank offer rate, after all. The US, the European Union, and Japan. There's been some potential issues around yen LIBOR. So those are the core, in my view, those are the core jurisdictions. And so the central bank governors and the heads of regulatory authorities in those jurisdictions.
Okay, Mark Carney, Radio-Canada.
Monsieur Carney, vous dites dès le départ, les perspectives de croissance de l'économie mondiale se sont affaiblies. Il y a tout le contexte de la Chine avec les pays émergents où on sent vraiment une décélération de la croissance.
Ouais.
Alors, dans ce contexte-là, quel est le plus grand défi qui guette le Canada?
Le plus grand défi qui quoi?
Qui guette le Canada, donc auquel fait face le Canada dans ce contexte-là?
Dans le contexte-là, c'est à ce moment-ci, avec la structure de notre économie, le plus grand défi concerne l'évolution des prix des produits de base, parce que c'est absolument clair que c'est le taux de croissance des pays émergents, surtout la Chine, qui influe principalement l'évolution des produits de base. Alors, nous avons vu depuis avril une diminution notable de ces produits, mais cela dit, à ce moment-ci, le niveau des produits de base est environ 20% au-delà du moyen historique. Alors, ça, c'est le point le plus important. Mais à la question de M. Fife, la chose pour l'avenir, c'est une réorientation de notre économie, de notre économie d'exportateur aux pays émergents à cause de à cause des perspectives de ces économies.
Et cela dit, à votre avis, un des plus grands défis n'est-il pas de freiner l'endettement des Canadiens? Toujours dans ce contexte actuel où on a l'impression toujours, sur le plan mondial, d'être dans une zone de turbulence qui reste là pour l'instant, à tout le moins.
Absolument, absolument. Et nous ne pouvons pas avoir une stratégie économique qui relie sur l'endettement des ménages canadiens d'ici à la fin du monde. Ça ne marche pas. Ça, c'est évident. Alors, avec des mesures du gouvernement du Canada, des mesures prudentes et opportunes, des mesures de surintendant des institutions financières qu'elle a pris depuis quelques semaines, la probabilité d'une évolution plus soutenable des bilans des ménages canadiens est élevée. Et nous réjouissons ces mesures.
Randall Palmer, Reuters.
Mr. Carney, some international banks have talked about pulling out of LIBOR panels, and some actually have, it seems, pulled out of them. What will be the effect on global financial stability and the global economy if more do? And what alternatives could there be to LIBOR?
Well, I think on the first one, we should recognize, and I think the institutions do recognize, the best institutions do recognize that they have a responsibility to remain in these panels and continue to post their estimates of where they can borrow in those horizons. After all, what is being asked of them and what they, in most cases, have been doing. And I think we should be a little careful not to tar all institutions in the panel with the actions of some. But what they're being asked to do is faithfully and consistently estimate the cost of which they borrow. And this, I mean, these are banks, and they have treasury desks, and they borrow, and this is not, shouldn't be that difficult to do. So to continue to do so in a manner consistent with the requirements of the BBA and the expectations of the global financial community and the global community isn't asking much. So I think that they should be able to continue to do that. First point. Second point, but in terms of the alternatives, there is an attraction to moving to more, obviously, market-based rates, if possible. And in reference to an earlier answer, that may be different in different jurisdictions. So in the U.S., some of the repo rates, general collateral, have some attractions that is less. Obviously, they're secured. So that raises a bit of an issue. There are different alternatives. OIS rates, overnight index swap rates could be used. Canada CDOR actually has some attractions because it's a committed rate. It's actually a borrowing rate that is used by banks on a regular basis, almost daily basis, when they take down syndicated BAs. So we may end up, I don't want to prescribe, it's very early days, but we may end up with different types of rates used in different currencies. And again, that's why, I think Jeremy's question, why should be a desire, and I think there is a desire to be coordinated as possible internationally.
Is there any evidence at all that any Canadian banks, either on any of the LIBOR panels or on the CDOR panel, have engaged in any collusion whatsoever? I'm
not aware of anything. The Bank of Canada is not the enforcement agency here, so we're not conducting the investigation. We're only providing technical assistance, or have provided technical assistance. I think there's only one Canadian institution that is on these panels, and they've made what to my eye was a pretty clear statement of their view of their role, and I would refer you to that statement.
Okay, I have three more people on the list I'm hoping to get through quickly before you have to leave, because I know that your time is pressed. Julian Beltram, Canadian Press.
Hi, Governor. We're now 4 years removed from the downturn, and I'm just wondering how would you describe in your words what the recovery has been like? Has it been as a disappointment to you, or did you expect this kind of start and stop and constant overhang of imminent doom from Europe now?
Well, we foresaw it all, Julian. No, I think the broad brush of the difficulties of the aftermath of a major financial crisis, yes, we would have seen it. The broad relative weakness of the United States and the impact on Canadian exporters and the additional requirements that would put on Canadian business to retool and retrain and reorient their activities, we would have seen. I would say that the scale and the depth of the European crisis is. At the moment of the decline, this has proven to have taken longer and been more acute than we would have anticipated in 2008. Now, in a world where that crisis is contained, it doesn't directly have that big an impact actually on Canada. It has a tremendous impact on Europe, and it has a greater impact on some other jurisdictions. So I'll put that there. Let me say one final thing, because I know we're pressed for time. The strategy, the broad economic strategy, in our view, has been the right one. We have relied on domestic demand. We've relied on consumption. Initially, the government played an important role on the fiscal side. We relied on consumption, broader household spending. But there's limits to that strategy. That's a strategy to bridge. It's a strategy to help reorient the economy. It goes back again to Bob's questions at the start, not just on manufacturing, but across our export complex. And that time has to be used effectively. And there's limits to that strategy. And we're seeing the limits on the household debt side, which is why various measures are being taken.
On the price of oil situation, there are positives to oil dropping for the economy, aren't there, in certain segments of the economy?
There are positives to certain segments. Certainly, as consumers, we appreciate paying less for gasoline, and others do. But I would say, as a whole, and our job is to do the add up as a whole. What's the net impact of lower oil prices on Canada? The net impact of lower oil prices on Canada is negative. It's one of the reasons why we've taken down our forecast for Canada because of oil and other commodity prices. It impacts investment, it impacts government revenues, it impacts incomes in Canada, it impacts linkages across the economy. I wouldn't overplay that. It's still elevated relative to historic levels. There still are major projects that are underway, and they're going to continue. And we still have an economy which is growing around its potential. So let's not get all doom and gloom here. But if you want to know what the net impact is negative. It's one of the reasons why the forecast is lower.
Chris Rand, CBC TV.
Governor, just a very brief one. I'm being shown on the Conservative Party website a picture of you, Minister Flaherty, and the Prime Minister in the office on the center block. Happy to pass it up to you. And it's their party website on which they're trying to sell bobbleheads. Do you have any concern to your images being used?
I want to see the bobblehead first, Chris. I'm not sure. You know what, Chris? Let's spare the theatrics.
I apologize for the theatrics. It's just one of those things that just comes across.
That's great. Sorry, do we have another question? What's the point of it?
That is the party website, sir. It's not a government website, and it's your image of the Government Bank of Canada on.
You know what? My image is on your website. My image is on lots of websites. Tiff's image is on lots of your image is on some website. This is the problem when you get your picture taken. It shows up various places. Look, I meet with the Prime Minister. I meet with the Minister of Finance on. I consult with the Minister of Finance regularly. I have to, as I should do, and Canadians would expect me to do. As Governor, I meet with the Prime Minister to discuss important economic issues. That photo, I think, is a photo from a meeting that occurred in the teeth of the European crisis, one of the teeth, if I can say that, of the European crisis, which is entirely right. I'm doing my job, and as people would expect.
Last question, David Battistelli, Omni.
Governor, would you be able to give us a sense of the economic impact of as a result of the federal cuts to the public service, and are we seeing any signs of that now?
What we see is, actually, Tiff, do you want to,
Sure. Sure. So distinguish between two things. First of all, as the governor indicated appropriately, the government put considerable stimulus in place in depths of the recession to support the recovery. What we see in the data, as we outline in the report, is that that stimulus has unwound a little quicker than we thought when we looked at the data last time we wrote the monetary policy report, and effectively there have been some revisions in the national accounts that suggest that that came out a little quicker. Looking forward, I'm just looking for the page. Here it is. If you look at chart 31 on page 30 in the monetary policy report, you can see we're very explicit about our projection for the contribution of government going forward. There's a small negative contribution this year reflecting what I just talked about, that faster unwind of stimulus. Going forward, we're looking at a contribution to growth of around 0.2. That's positive, but it is lower than historical average, which would be more like 0.6, 0.7. And the reason for that difference is the government restraint that is built in and embedded in both federal and provincial budget plans.
I guess I'm just trying to find out, potentially cutting 20,000 public service jobs is going to have a significant or not a significant impact on consumption, growth,
it's if I may put it in context. Look, it's obviously incredibly difficult, and I know a number of these individuals. It's difficult for those individuals. We had to make tough decisions at the Bank of Canada over the course of the last year in a similar vein. So from a personal level, it's incredibly difficult. But that said, the 17 million plus people working in this country, the economy since the trough of the recession not only recovered the 487,000 jobs lost, but added an additional 272,000 on top of that. Almost all full-time, almost all above average wage, 90% above average wage, almost all in the private sector. So it's 20,000 in that context. So I think that answers your question, but I'm not downplaying on an individual level the issue.
Okay, that's all the time we have.
Great.
Thank you very much.
Thank you.
Here's your BlackBerry.
Yeah, I'm confiscating your BlackBerry. Let's see. Let's just see what your recent.